This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. It was what some would say was Taco Tuesday. We're going to talk about that a little bit later on, more on the war in a moment. But it's also a Fed Wednesday on this April 8th, 2026, because we are just seconds away from the minutes from the second Fed decision of 2026. Tim, that was back on March 18th. We've got a rally underway, though, and yields have pulled back ahead of this.
Oh, that's ahead of this. Think back to when that meeting happened, though. U.S. Treasury slumped, short-term yields soared to their highest in about 5 months. And we're getting Fed minutes in just a second.
And with that, off to Mike Mckee. He's at the Fed in D.C. Mike.
Well, no surprise, the Iran war and tariffs were central to the discussion among Fed officials at their March meeting. The full effect of tariffs had not yet moved through the economy, officials said. A resilient economy, they called it. And the war, then only a few weeks old, raised the threat of inflation increasing and hiring slowing. Some participants judged there was a strong case for a two-sided description of the committee's future interest rate decisions in their post-meeting statement, reflecting the possibility that higher inflation might call for rates to be increased, although no member called for a rate move at that meeting. Most participants raised the concern that a protracted war could lead to further softening of labor markets, which would warrant additional rate cuts. But many participants pointed to the risk of inflation remaining elevated for longer than expected, which, quote, could call for rate increases. The vast majority of participants noted that progress toward the committee's 2% objective could be slower than previously expected, the minutes say. Labor market conditions appeared vulnerable to adverse shock, they say, most participants highlighting the risk that a protracted conflict in the Middle East could weigh on business sentiment and further reduce hiring. As for policy, most participants felt it was too early to judge how the war would affect the economy. Many participants judging that in time it would be likely become appropriate to lower the target range for the federal funds rate if inflation were to decline in line with their expectations. A couple highlighted, though, that they had pushed their assessment of the most likely timing of rate cuts further into the future. Stephen Myron, though not named, was the only dissenter. The minutes do note that one participant argued rates were still restrictive, and that was increasing risks to the labor market. Guys?
Mike, this is the moment where we sort of parse language here, and we ask you to translate what different words means when it comes to these minutes. The word protracted, that has to do with a period of time, a longer period of time. I go to that word because the Fed said that protracted war could hit jobs, warrant cuts. How long is protracted?
They do have a guide to Federal Reserve terminology in terms of some, many, few, etc., but they don't have a definition of what protracted means. Obviously, it would have suggested that the war could last for several months or longer. We're kind of in a middle period now. Hard to know whether this fits that model or not.
All right, Mike, we're going to come back to you in just a moment. Our Mike Mckee there at the Federal Reserve. We're going to continue with Mike in just a moment. Do want to check on the markets in terms of what we've seen in terms of reaction, because, listen, folks, we saw a reset happening late last night into this morning because of what is going on, easing tensions, or so it seems, when it comes to the U.S. war in Iran. Having said that, as for the S&P 500, pretty much where we were prior to the release of these Fed minutes. Same story for the NASDAQ 100, just a little bit of a move to the upside. Probably more importantly is what's going on in the Treasury market. And I'm just taking a look all along the curve in terms of what we're seeing. And we're pretty much where we were prior to the release of those Fed minutes. So, maybe investors, of course, a little bit of I don't know. I think they're just focusing on the war at this point and maybe just kind of happy in terms of that happening at this point, although there are a lot of questions about that. Mike, I want to go back to you. I mean, will the Fed start to look through the war based on what we got? Or, we still have a lot of questions about what happens next.
Too early to reach a judgment on that yet because the war has maybe not ended. We don't know for sure. We've had conflicting headlines all day. Most Fed officials who've spoken in the run-up to their next meetings, since the last meeting so far, have basically said the same thing that the minutes suggest, that there are increased risks to inflation that could come starting with oil prices and then working their way through the economy. They also note that tariffs had still yet to work their way through the economy, and we might get more. So there's a lot they don't know at this point, and I think the minutes really don't give us any more clarity since they were 3 weeks ago, and nothing has happened that gives us more clarity into the future direction of interest rates and oil prices and everything else at the moment.
The next move from the Fed, Mike, not whether it's going to, the Fed's going to just not change rates, but are people still thinking the next move could actually be higher rather than lower?
No, it doesn't appear that way. Right now, we don't have a good measure of inflation since the war started. Friday, we get CPI. That'll be our first real clue. And then we'll watch PPI the following week. We do get PCE inflation tomorrow, but that's for February, so it's not going to tell us anything. But the other two inflation measures will give us an idea of what the initial shock is. Now, we're already into April at the highs of gasoline prices, so we'll have to see if they stay elevated throughout the month, what that's going to mean for inflation. The word we get from oil companies and shipping companies is that this is going to take a while to work its way out of the economy, even if the war ended today. So they're likely going to be faced with uncertainty for quite some time, and I would imagine that we'll get a very similar meeting and minutes when they meet on the 29th of this month, because they're basically going to have to say the same things. Inflation could rise. It could become longer lasting. The labor market could weaken, but we just don't know yet.
Yeah. Mike, sit tight for a sec. We want to bring you into the conversation because here in studio with us, back with us, is Matt Luzzetti. He's Deutsche Bank chief U.S. economist, head of U.S. economic research, as we said, right here in our studio. Listening to Mike break it down. Good to have you back.
Great to be back.
What jumps out for you?
Yeah, I think Mike kind of highlighted things, and actually the note that he was talking about where the Fed goes through their account numbers, I had it up in front of me, and I think the one thing that sticks out, back in January, several Fed officials were pushing for this two-sided language. They wanted to open up to the possibility that the next move could be a hike, in addition to being a cut. At the March meeting, it looks like this group grew a little bit. So now some, rather than several officials, are in that group. Some in the Fed's lexicon is actually more than several. So you do see that group as growing. Now, Chair Powell at the meeting in March didn't actually note this. He didn't push that. He was asked about it specifically. So I think you've seen that group grow. Now, the minutes always can be stale, right? There's several weeks ago, especially in an environment where things are evolving so quickly. But
sometimes I love it because it kind of just reminds us, okay, here's where we were before some of the craziness. And then, do we get back to that? Or does that craziness, Matt, affect us longer term, stay with us?
And it gives you a sense of, how hawkish were they, for example, before we got a much stronger jobs report, which could have alleviated some of the concerns about downside risks to the labor market. And so that context matters a lot.
Do you want to ask Mike a question?
Mike, from the minutes perspective, do you see a sense that the Fed could be opening up more to rate hikes as we look ahead? I like the question about protracted nature. I thought that was really giving the Fed optimal flexibility and optionality to respond however they might want. But your overall read of the minutes, is the Fed inching closer to potentially this two-sided language? Do you think they adopt that at the April meeting?
I don't think they will. It'll really depend on what happens with the inflation numbers. They could, and you're right, we have seen more people talking in that area. I think the sentence that you highlighted, the other part of it was in the January meeting, some members said they could support the idea of a two-sided explanation, and this time they said there was a strong case for it. So what that tells me is that probably the case is going to be stronger for no move, and that the people who wanted to cut are going to be fewer at the next meeting because they still don't know, and the risk is a little more two-sided. But I can't say that it really sets them up to raise rates at this point because, in theory, things might get better by then.
It's like, honey, I said some. No, I meant more. Like, I don't know, the nuances. Hey, Mike, before you go, last thing on your mind when you think about the U.S. economy, so much coming at folks. I can't wait for earnings. I want to see what CEOs and the C-suite has to say about the outlook if they're willing to commit. But what's top of mind for you here?
Well, you make an important point about earnings and what CEOs say, because they do note in the minutes that tariffs had caused companies to stand aside and not make decisions, and that continued price increases from the war could cause companies to cut back on hiring. Mm-hmm. So those are the kind of outlooks we'd like to see from the CEOs that will give us a better idea of where the economy is going. But overall, what I take away is that the Fed officials are just like the rest of us and the folks on Wall Street. They don't know what's going to happen, but they stand ready to respond in whatever direction with whatever they can do to help.
Which is kind of what you want in a central bank. All right, Mike, you can come back home, so we'll be welcoming you back. Of course, our Michael Mckee, Bloomberg TV and Radio International Economics and Policy Correspondent, but still with us, Matt Luzzetti. Matt, fundamentally, how is the U.S. doing? Like, when you think about it.
I think if you take a step back and you look at the incoming data, we have an economy where growth has been very resilient. You know, the economy has experienced abnormal and historic shocks over the past 12 to 18 months. And despite that, the economy has been continuing to grow at 2% or above. The labor market, extreme volatility in the month-to-month readings. But if you look at the unemployment rate today, is about where it was last summer. It's still at historically low levels, almost 4.2%. Most measures of labor market slack are very stable. The hiring rate has been stable. The quits rate's been stable. And so despite all the worries, despite the fact that we are experiencing the significant adverse shocks that are putting attention to the Fed's dual mandate, the economy is actually performing quite well.
The economy is not monolithic, and there are different parts of the economy. And the way that different people feel this energy shock is a lot different. We spoke to Chris Britt, the CEO of Chime, last week, this neobank or fintech, whatever you want to call it, where the average income of the user is about $75,000. He said his consumers' fuel spending rose 25% over the last month as a result of the war with Iran. What does it do when that consumer is hit so hard to your outlook of the U.S. economy?
Yeah, you've had an economy, and part of this is always the state for the U.S. economy, which is that it is heavily skewed in terms of the impact of consumer spending towards higher income households that drive a disproportionate share of consumer spending. Now, the shocks that we are seeing tend to be regressive. So they're hitting the middle and lower part of the income distribution more. So they're raising fuel prices. They will be raising food prices most likely. The tariffs that we've seen impact goods more than they do services. So all those are negatively impacting the lower part of the income distribution. That part of the income distribution is generally always more fragile, but has been shown to be more fragile in an environment of higher interest rates, higher inflation that we've seen. But if you take a step back, all of the aggregate spending data still looks quite good. Consumer spending looks relatively solid. From a business CapEx perspective, yesterday we got durable goods orders and shipments, which remain pretty solid. So there's still these kind of distributional concerns about the consumer and the broader economy. But on average, in the aggregate, things look very resilient.
So we keep talking, Matt, a lot around this table about the longer impact of the war. And I can't remember if
protracted.
Protracted.
In the words of the Federal Reserve.
Yes, exactly. But I just think about, and I can't remember if we've talked about this yet with you, is that this idea that you have nations thinking about what they need to protect domestically for their national security. And so producing more at home, making sure they have access to raw materials. I don't know. I'm obsessed with this about the rethink. And I do wonder if that's factoring into your models longer term. And with that, I think about labor costs in here, that would make things probably more expensive here. Even if you take out the moving stuff around costs, I just think about what that does to inflation longer term.
Yeah, so I think there's probably two aspects of this. One is supply chain resiliency, and it was a key topic coming out of the pandemic. And maybe we've forgotten a little bit about it over the past several years, even though you had this historic tariff shock.
Yeah.
But what's happening over the past month certainly intensifies those concerns. Now, it might mean that you have to invest more across multiple supply chains. You incur more costs because of that, and therefore, yes, you're more resilient, but at the same time, your average cost is higher. And so that could feed into inflationary pressures. The other part of this is how are people thinking about their own defense? And so, can European economies rely less on the U.S. for defense? I think certainly we've seen Germany take a strong stance on that position. significant investments in their own defense industries and infrastructure. And that will mean globally fiscal policy is more proactive than it has been in the past. And because of that, inflation will be higher. As
guns versus butter, like
Correct.
thinking about the impact on what that does for society.
Correct. I think ultimately it will squeeze out and push out some of the private sector. Will overall raise interest rates, keep interest rates higher, and inflation higher.
When we talk about a duration of a conflict like this, I think there's this idea that we're in a period where a ceasefire has been announced, but it's clear that things aren't going back to what they were before February 28th. Oil's not there. Maybe the excitement about what it could go back to is there, but there's still skirmishes happening, and there's still negotiations to be had. Is there a chance that the war may not look like it did in the first 5 weeks, but there is still a heavy presence by the United States and Israel in the region for a long time to come, and that affects the economy?
Yeah, I think we have to think that there's still uncertainty here, right? We're in day one of what is still an uncertain truce at this point. And so, how the world looks 2, 3, 4, 5, 6 months down the road remains highly uncertain. I think it is very likely that energy prices are just higher than they were before the recent events. In part, that's because even if the Strait of Hormuz picks back, reopens fully, and we're clearly not there yet.
No, its oil transit remains halted now.
Correct. So we're clearly not there yet. But you've had some damage to energy infrastructure in the region, which is absolutely critical, and that's going to take longer to get on track. So I think regardless, you are likely in a world where energy prices overall, and therefore inflation for this year, is going to be higher as a result. Now, I think the U.S. economy can absorb that, and I think that it can be resilient in response to that. I think if oil prices were to move up to $150 a barrel, that's the period where we became really worried that it could wipe out the benefits of tax cuts to U.S. consumers. You might get into nonlinear effects on the economy where growth begins to be more damaged. So, yes, I think it has lingering effects on inflation. I think that impacts the Fed in a hawkish direction, but it doesn't necessarily overturn a relatively resilient view for the economy.
Matt, I want to throw one more thing. And, before the war, every conversation either started or somehow worked its way to artificial intelligence. Yeah. And you guys have done a lot of work. Certainly, we've talked a lot about the potential impact on the labor market, but you guys also did a recent note on AI's maybe impact on inflation. What did you look at, and what did you guys find out?
Yeah, so I think if you think back 6-7 weeks ago, the entire conversation in markets was about how AI was going to be disinflationary and was going to displace labor, both of which was going to put downward pressure on inflation and on interest rates. Now, obviously, that's completely gone away from the discussions at the moment. But I think there's just this very strong conviction in markets that AI is this massive disinflationary force. One thing that we did is we actually just went out and asked various AI tools whether or not they think it is going to be disinflationary.
Did the tools
explode? They did not explode.
Okay, that's a good sign.
And people, they joke, of course, if you ask Hal whether or not it's going to take your job, it's going to tell you no. But
I'm sorry, Matt, I cannot answer that for you.
Just got about 40 seconds.
Sure, but from the inflation perspective, I thought you found really interesting results. So AI is not at all convinced that over the near term it's going to be a disinflationary force, and it highlights, I think, key factors. There's a big investment boom that's taking place. It can add upward pressure on energy prices. Yeah. But even if you look over the next 5 years, it puts about an equal probability that AI is a significant disinflationary force to it lifting inflation. And again, it's kind of highlighting a lot of these supply chain issues and the investment demand part.
By the way, one of our favorite things, maybe it's just mine, hey, do you know who Tim Stenovec is? Do you know who Carol Massar is? We get all kinds of crazy answers. Matt Luzzetti.
We know who Matt Luzzetti is.
We certainly do. Deutsche Bank Chief U.S. Economist, Head of U.S. Economic Research. All right, when we come back, we're going to talk clothes, retail. We're going to talk Levi's with the CEO.
It's 2:21 on Wall Street. I'm Amy Morris. Markets feeling optimistic after the U.S. and Iran reached that ceasefire deal. We check markets for you all day long here at Bloomberg. The S&P 500 is up 2.3%. NASDAQ up 2.75%. And the Dow up 2.5%. The 10-year Treasury yield at 4.29%. And the 2-year yield at 3.78%. Both WTI and Brent crude bouncing around $95 per barrel, pretty much where it's been all day. Fed officials consider differing scenarios for the economy following the war in Iran, including interest rate cuts and rate increases. Now, most officials worried that the war would hurt the labor market and warrant lower lower interest rates. Many policymakers highlighted the risk to inflation that might warrant rate increases. Moody's Ratings cut the outlook on Blue Owl credit income to negative after significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and a failure to clearly explain liquidity restrictions. Moody's expects elevated redemptions to persist in coming quarters and slower inflows. Blue Owl shares about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, Amy, thank you so much. Yes, indeed. We are here at Bloomberg headquarters in New York City. Well, thank you, Harry. Thank you, Hulu. Thank you, FX. Thank you, Love Story, and more. We want to talk about Levi, Strauss, and Company. Company's latest results really knocking the socks off investors. The stock is up the most in 1 year as the company raised its projections for the year after reporting better than expected quarterly results. They cited strong demand in all regions as the denim brand steers shoppers to its own stores and website. We're going to talk about that a lot. Company reporting revenues of $1.7 billion in the fiscal quarter. That exceeded the average of analyst estimates. Earnings per share also, excluding some items, surpassing expectations. The stock now up about 7% year to date and has gained nearly 80% in the past 12 months. Yep. For those watching right now, it is up more than 11%, Tim, in today's session.
With us is the president and CEO of Levi Strauss & Co. She's also a member of the company's board. She's former CEO of Kohl's. She spent close to 17 years, too, at Starbucks. We got Michelle Goss here in the studio. Welcome. It's good to see you. The stock soaring. Investors are liking what they see. Where did the momentum come from? And what's really working right now?
Yeah, well, first, thanks for having me, and I'm really excited to talk about how we started the year. You know, we are seeing momentum across the board, which is around our strategies really picking up and accelerating. So we delivered 9% organic growth, 14% on a reported basis. We are seeing this across geographies. We're seeing this across categories. We're seeing it across genders.
Why?
We're seeing it across channels.
Why is this happening?
Well, you know, it's the brand,
Yeah.
It's the product, and it's the execution. And all of those things are working. And I got to tell you, the team is doing a phenomenal job. We're coming off of a solid year last year, and it's accelerating right into 2026.
Michelle, denim, though, is such a crowded category. Like, I won't go to certain department stores because it's just too much for me. But I do go to Levi's. And
well, thank you for that.
You're welcome. You're welcome. And I said to you coming in, my 23-year-old, she's wearing them. That's where she wants to go. You talked about your wife. Like, you are hitting a lot of different demographics. How do you do that? How do you appeal to so many?
Yeah, well, I would say it does start with the brand. And we like to say that Levi's operates at the center of culture. And we're hitting a new stride with the brand. I mean, the brand has been strong for a long time. Mm-hmm. Last year, it went up a notch. We had this fantastic partnership with Beyonce. Mm-hmm. That moved into a partnership with Shabuzi. And this year, we launched our brand campaign at the Super Bowl. And it was the perfect time because Levi's Stadium was hosting the Super Bowl. And we hadn't been on the Super Bowl in over 20 years. But it wasn't about launching an ad for the Super Bowl. It was about launching our campaign. And we call it Behind Every Original, which is a global campaign and leans into what Levi's does best across sports, across fashion, and music. And so if you've seen the ad, it really does bring that to life and has artists like Doechii or SGA, the basketball superstar, great, and Rosie. And I like to talk about Rosie because here is this, she was part of Blackpink, 90 million followers and growing, and we're rolling that right into a collaboration with her in Asia. So that is taking off as we speak. And so this is about launching, like I said, a campaign for the year. Looking ahead, we've got World Cup coming up that the Levi Stadium is hosting. We have collaborations. You know, we had our collaboration with Nike and Jordan a couple months ago. We had people lining out the doors to get this special collab.
Michelle, when you talk about these partnerships with celebrities, with the artists, I know each one of them is different, but in general, are they coming to you or are you identifying them and you're going to them? How organic is it?
It's all of the above. Well, so and it happens organically. I mean, literally just at the Brits, we had Harry Styles dancers all wearing 501s. I mean, this is about being at the center of culture. And the Beyonce partnership, that started because she wrote a song called Levi's Jeans. But we've been friends with Beyonce for decades, back to the 90s. Or Carolyn Bessette wore the 517s. And,
right.
In Love Story, it's heavily featured and sales are up like 25%.
Did that surprise you? And when did you first all of a sudden notice? Like, we've talked about this on air, the impact of this.
The 90s, we've known about the 90s trend for a long time. And in fact, when you go into our stores online, go into our wholesale partners, I mean, that 90s trend is Levi's is all over it from top to bottom. I mean, one of the things we talk about when you ask about what's working, we talk about our 2 key strategies, which is about becoming a more DTC forward company and also evolving the brand from being about jeans to head to toe. We say denim lifestyle. What does that mean? It means that we want to give you the whole wardrobe. It starts with the jeans, but tops, button-downs, jackets, outerwear, dresses, all through the lens of Levi's, but we're playing now in the total apparel space.
Michelle, hang on for a second. Forgive us. This is the world we live in. You live in it too. We all do. We do have some headlines crossing the Bloomberg terminal. This is coming involving the war, U.S. war with Iran. Iranian parliament speaker posting a violation statement saying that the ceasefire deal with the United States has been violated. So again, this is just crossing the Bloomberg terminal. And let me just take a quick check on the market trade. We are seeing stocks just dip a little bit lower on that, but we're still seeing quite a rally across the board. And a quick check on what we're seeing in terms of yields. They too are just ticking up a little bit, just a hair. So we're going to need a little bit of clarification. But folks, this is the world we live in. And this is what we said, that even with the headlines last night into this morning, that the details are going to be really, really crucial. Emerging market currencies index trimming gains as Iran says the ceasefire violated. So forgive us, that's our environment.
We're speaking with Michelle Goss, the CEO of Levi Strauss. Michelle, perhaps that's a good segue to talk about the macroeconomic environment and potential disruptions you've seen from higher transportation costs as a result of bringing these products from overseas into the U.S. and indeed around the world. What has this macroeconomic backdrop over the last 5-6 weeks done for your business?
Yeah, well,
or the last year when I think about tariffs and stuff too.
It's been a really uncertain time. I take a step back. You think about the company, LS & Co. We've been around for 170 years. We've weathered lots of storms and navigated, and it goes back to who we are as a brand. During times like this, we have to deliver, we have to execute, but they really do go to brands that they trust, that they love. We offer quality, we offer great value, we offer durability. To date, our consumer has proven resilient. I mean, you see that in our numbers. We are bringing them a lot of innovation. I think, if pressures come on the consumer, when the wallets get tighter, we have to up our game, right? Wallets get tighter, we have to work harder. And that's what we're doing. We offer great red tab right down the middle. We offer Signature by Levi Strauss, which is an awesome value. That business was up 16%. It's in the $20, $25 range. And then we offer Blue Tab, premium Japanese denim. And, you can buy a pair of jeans from Levi's now at like $200. So we're serving every customer need, but know that we are constantly just making sure that we can address the needs of the consumer in the moment, whatever that moment might be.
Love talking fashion, love talking the collaborations. I also, though, do love the nitty-gritty of like supply chains and what a company like you that has been around for so long and seen a lot of different market cycles. What is your supply chain? And have you kind of spread it around based on what we've seen, not just in the last year, but even coming off the pandemic that reminded us that supply chains can be impacted dramatically when they're focused in one area?
Yeah, that's right. We have a robust, very diversified supply chain across many, many countries. We have a really strong team that is agile and responsive. And so, and these relationships with our suppliers go back decades and decades. So we have tremendous partnerships. And as we've navigated things like tariffs, everybody has stepped up to help us, determine what the next steps are there. Just to put it out there on tariffs, I mean, everything that we've guided the street includes tariff assumptions on, call it the original reciprocal tariffs at a higher rate, at that 20% incremental rate. There's been recent news of it going down back to 10%. We haven't baked that into our numbers yet. One could say that is upside there.
Yeah.
Could mean up to $35 million in EBIT or 7 cents of EPS. But we've held back just knowing that there still is uncertainty out there, as you were saying.
One question we asked outgoing CFO Harmeet Singh in the last year in the wake of tariffs has been about moving production to the United States. He said, no way, that's not happening. Are you sticking by that?
We are sticking by that. Yeah, that is an industry that really has shifted overseas. And like I said, because we have these enduring, long-lasting relationships, I know we'll be able to navigate whatever's ahead on that front.
All right. So a company like you guys, our whole Bloomberg team is like, ask Michelle this. But we're curious about your prospects for reaching $10 billion in revenue. 5 years, 7 years? How are you guys thinking about it?
we have not put a number out there,
but
or
you've
a
got
date
some great
out there.
momentum. Like, do you feel like you can take this momentum, and how far can you carry it out?
Yeah.
Do you feel comfortable?
Yeah, what I can say, and we have, I think it's important to have bold goals, right? So we've put the 10 billion, we've put the 15% EBIT. I think if you look at the progress over the last couple of years, take revenue. We came off of 7% growth last year. That was up from the prior year. Yeah. This year, we're again guiding mid-single digits. We just had a blowout quarter at up 9%. So I think it's safe to say that you can count on consistent, sustainable growth. And then on EBIT, on profitability, we're making that march to 15%. Again, a few years ago, we were 9, 10%. Last year, about 11.5%. We just said we're taking our guide up yesterday to 12%. So you see that sequential progress, and
so 5 years,
keep doing that. We'll let you guys do the math, but we're confident. I mean, like I said, the exciting thing we are
like,
right
you
now,
have visibility.
The strategies are working. We've made some choices the last couple of years. We sold the Dockers brand so that we could really focus on the Levi's brand, and there's so much opportunity.
So certainly fashion is working in your favor right now, but we know the industry is fickle and consumers are fickle. What happens, or what do you do rather, to make sure that when the trends do change, you move with them?
Yeah, well, as the category leader in denim, let's start there. It's our responsibility to fuel the trends. The denim category is growing. It's accelerating right now.
I have more denim in my, no, seriously.
But nowadays,
in my,
I think
in my wardrobe that I haven't in a long, long time, and I keep buying more.
But it's not always like that.
But I would say though, but this evolution to denim lifestyle, or I'll say lifestyle head to toe, that's not all denim, right? It is fine if you're buying a rib cage wide leg pair of jeans. What's the perfect top that goes with it, which is going to be different than a low rise. Right. And so now that we're playing in this broader space, which basically increases our addressable market by 15x. We're playing in a $1 trillion market in apparel. That requires focus and discipline, but we've really up-leveled our capabilities to do that. And, if you just take this last quarter, our tops business was up 13%. Mm-hmm. It's only 20% of our business. So when you think about all that upside, so we now, and 40% of our business is non-denim. So it's not just denim anymore for Levi's.
So what is the biggest opportunity or categories that are not yet tapped that could be big for you guys?
Yeah, I would say a couple things. First, when we think about gender, women's is not quite 40% of our business. Last I checked, women's has a big play in the apparel market.
My closet's a lot bigger than my house.
Just saying. But so there's still, that should be at least half our business. So we're expecting tremendous growth there. I was just talking about head to toe. We always will be the leader in bottoms and denim bottoms, but tops. So in our business, we sell 2 bottoms to every top, which, by the way, that used to be like five bottoms to every top. That should be the other way around, minimally 1-to-1. That is all white space for us. And then we have amazing growth ahead of us in expansion. There's still room to grow in the US, but you think about these international markets, in some cases, we're just getting started there. So as we look ahead and say, how are we going to go from 6 point something to 10 billion, we can chart that out, and we feel very confident.
Thank you. Forgive our distraction. We were dealing with some headlines on the Middle East, which is obviously so important to everybody's macro. Right. But please come back soon. We would love it.
Thank you. Well, thanks for having me.
Yeah, we loved it. President and CEO of Levi Strauss & Company. Of course, she is Michelle Goss, joining us here in studio.
Carol mentioned the headlines on the Middle East. Iran's parliament speaker says a ceasefire deal with the U.S. has been violated. Stocks off their highs of the day. Let's head on over to Amy Morris, who's watching markets and the headlines. Amy.
Hey, Tim. Yeah, you're absolutely right. Stocks are off their highs for today, but still in the green. The S&P 500 up 2.3%. NASDAQ up 2.75%. The Dow up 2.6%. The 10-year Treasury yield at 4.28%. And the 2-year yield at 3.78%. WTI and Brent crude bouncing between $94 and $95 per barrel, pretty much where they've been throughout the afternoon. Spot gold now less than 0.5% higher, and Bloomberg Dollar Spot Index about 0.75% lower. Now, ExxonMobil lost 6% of its global production in the first quarter because of the war in Iran. The company says 2 liquid natural gas production lines at a facility in Qatar were damaged by Iranian missile strikes, and that'll take a while to fix. Exxon expects first quarter earnings from its energy products division to be lower because of price volatility. Exxon shares more than 6% lower at this hour. And President Trump posted on social media that any country that would supply military weapons to Iran would be immediately tariffed. The president writing that would apply to, quote, any and all goods sold to the U.S. of A, 50% effective immediately. Well, Trump might not have the authority to do that after the Supreme Court's decision that his previous tariff regimen that was put in place via an emergency law violated the Constitution. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, folks. Watching markets, watching the headlines as we continue to see reports about the Iranian parliament speaker, Galbaf, who would lead the country's negotiating team in talks with the U.S. in Islamabad on Friday, according to the semi-official Iranian students' news agencies. But he is talking about some different concerns about the ceasefire. And again, we had some headlines about the ceasefire being violated. We did see a little bit of the Treasury rally fading, the equity rally fading, but just a hair. So I just want to put it in perspective. But again, the Iranian parliament speaker also posting a violation statement. So the talk's unreasonable. So again, we're trying to make some sense out of all of this.
I'm just going to this statement right now. Quote, the deep historical distrust we hold toward the United States stems from its repeated violations of all forms of commitments, a pattern that has regrettably been repeated once again. The speaker is saying non-compliance with the first clause of the 10-point proposal regarding the ceasefire in Lebanon, a commitment that the prime minister has also explicitly referred to and declared as an immediate ceasefire everywhere, including Lebanon and other regions, effective immediately.
They also say the entree of an intruding drone into Iran airspace, which was destroyed in the city of Lar in Fars province, in a clear violation of the clause prohibiting any further violation of Iran airspace, denial of Iran's right to enrichment, which was included in the 6th clause of the framework. They say now the very workable basis on which to negotiate has been openly and clearly violated even before the negotiations began. In such a situation, a bilateral ceasefire negotiation is unreasonable. We have said many times the devil is in the details, but curious to see what our next guest has to say.
Dr. Ed Husain is senior fellow at the Council on Foreign Relations, focused on U.S. foreign policy toward the Middle East generally. He's a professor at the School of Foreign Service at Georgetown University, where he teaches classes on global security, Arab-Israeli peace, and the shared intellectual roots of the West and Islam. Dr. Husain joins us from Abu Dhabi. Dr. Husain, just your reaction to the latest headlines and the fragile nature of this ceasefire.
Fragile nature is exactly the right phrase. I woke up this morning here in Abu Dhabi with signal alerts going off on my phone. And then throughout the day, we've had attacks from Iran on Dubai. As late as 45 minutes ago, there were attacks, drone attacks, interceptions from Iran into Dubai. So here in the region, especially on this side of the Strait of Hormuz, it didn't feel like a day in which there haven't been violations, but there's been not much coverage of that. Now, Galibaf, the Speaker of the Parliament, calling this unreasonable, it doesn't seem like an outright rejection. My question to the audience and for all of us thinking people is, why does Iran care about Lebanon? And that's part of the problem, that Iran hasn't given up its imperial ambitions, that violation in Lebanon, which means Israel's counterterrorism measures, that wasn't a violation of Iranian sovereign space. And yet it still harbors these ambitions that it's trying to exert pressure on Lebanon and Israel's efforts there. So I think that's something for us to think about, that it's not just Iran's concerns about Iran. Iran still has these ambitions around the region, which was one of the reasons why October 7th happened. 3 years ago. And this is downstream from that terror attack that Hamas instigated with Iranian government support that continues to ricochet around the region and the world.
I'm glad you went there, Dr. Husain, because I think one of the things we're trying to figure out too, because Israel has continued its ambitions, right? It seems like, and its attacks on Lebanon. So are you saying that Iran still has bigger ambitions by being concerned about that? And so I think we were trying to say, well, Israel has to stop. So help us understand, you understand this region, the dynamics between all of these players and what their missions are and how it might not coincide with what the U.S.'s ambitions are. Because I thought this was about, the nuclear ambitions of Iran.
Yes. I mean, you're absolutely right. The nuclear ambitions are linked to having an Iran that is surrounding Israel with proxies, which was previously the Syrian government, the Lebanese government led by Hezbollah, and in Yemen, there are Houthi attacks that are anti-Israeli, and supporting movements inside Saudi Arabia, inside Bahrain. So these are all movements outside of Iran. And now we have a situation that Iran is trying to negotiate control of the Strait of Hormuz, which it didn't have previously. Now, all of that, and you're right to ask the question about Israel, plays to Israel's existential angst. Israel and Jewish people writ large, as we know, are a traumatized people coming out of the Holocaust, and October 7th pressed that wound, which means we survived since the rise of the Iranian regime, the mullahs in Iran since 1979, by more or less trying to accept that the Iranians will have forces parked all around our borders and will try and do a peace deal. October 7th made the Israelis realize we can't have that world again, and we don't trust the Iranian intentions, and they will support Hamas and Hezbollah attack our people again. Therefore, we'll go after them everywhere, including Iranian nuclear ambitions. And I'm afraid to say this, but it's the truth, and we can't shy away from the truth. For as long as Israel feels it's not safe, it will continue to attack Iran and its allies. And the biggest mistake Iran makes in response to this is, rather than fight with Israel, it begins to attack countries such as where I'm sat here in the Arabian Peninsula, in Abu Dhabi, Dubai, Kuwait, Bahrain, Saudi Arabia, Jordan. And I think that's the danger of the Iranian regime, that it wants to more or less draw in the rest of the world in its war with Israel. And in that, and I think there's the good news is countries here now feel closer to America than they've done in the last 15 to 20 years. So there's a lot to play with in terms of enhancing US influence and relationships with countries here in the Arabian Peninsula.
Just quickly to get your thoughts, though, isn't this about Israel's existential angst versus Iran's existential angst? Is that what's kind of like, how if you've got that going on, you tell me how you end that.
It's a battle of different willpowers, different wills, and the Israelis will have stronger willpower for all kinds of reasons. They have 3,000 years to back that, and the Iranians also have strong willpower and have 3,000 years to back that. The rest of us are caught up in that. And the way you end that is by making sure that Iran and the Iranian government, as it stands now, focuses on normalizing Iran's economy as the Japanese did and the South Koreans did, rather than Iran's ambitions being regional and global and shouting every Friday, death to America, death to Israel, and attacking Arab neighbors and allies who have not attacked Iran. Even to this day, we here are in a defensive posture. And the way you end that is by ensuring that Iran's government is not centralized, that Iran's government is decentralized, that there is an Iran that's an Iran of federations, that minorities inside Iran, the Azeris, the Baluchis, the Arabs, the Hazaris, the Persians, the Kurds have greater rights.
Dr. Husain, is that realistic? Is that realistic in your view? Could that actually happen after 47 years of rule from under the Ayatollah, an Islamic Republic, and an IRGC that is so powerful?
It may not happen next month. It may not happen the month after. the US and Israeli attacks on Iran have consolidated the government's nationalist appeal for unity. But if we look at the Iranian population, since the Green Movement during President Obama's time to now, every 2 or 3 years, there's an uprising against this government. This government now is weaker than it's ever been before in terms of its air force, naval force, and ability to produce missiles. But one of the reasons why President Trump tried to support the popular uprising inside Iran was to diminish the government's outreach. But the mistake is now the government is stronger domestically. But there will inevitably be uprisings inside Iran. And I think this government at some time will fall. And we in the West, with our Arabian allies, need to have a perception of what a federalized Iran looks like, where there isn't a centralized control by the IRGC. And that's where I think all of us are failing. We just don't have an alternative vision for Iran without disrupting, without causing refugee flows, without causing further conflict, that all of these minorities inside Iran, I mean, Azer is 25% of the country, close to Azerbaijan, Turkic population, the Kurdish population, huge inside Iran. How do we decentralize power with these minorities that are actually pro-Israel, pro-Arabs, pro-America, rather than the mullah regime trying to take us back to a messianic world order that continues to support forces against Arabia as well as against America and Israel?
Our Dan Williams, who's in Jerusalem, had sent us and shared with us a post he did earlier this morning. He said, when the all clear sounded after the last Iranian missile launch in the early hours of the morning and the ceasefire took hold, my neighbors filed out of the communal bomb shelter, smiling wearily and wishing one another well, quote, until we meet again in 2 weeks' time. I mean, that's I don't know, the reality. Like, you talk about this federalized Iran, what that might look like, and having the ability or having the trouble kind of figuring that out. Is that because it's impossible? I've had conversations with folks about the region, informed people, and just saying, it is existential. There's something in the culture of Iran, that they are preparing for. And so you can't just get rid of that overnight. So it makes me wonder, can there be a federalized Iran?
Well, we haven't made the argument. I've been thinking about a federalized Iran over the last 2 or 3 years. And you look at their history, you start to see that Iran was always a federalized entity, but as in ethnically composed, different ethnic compositions of the country now want to have greater rights. And we haven't recognized that. For example, Azerbaijan and Azeris have a strong relationship. We haven't focused on that. We have ability from Turkey and our NATO ally to project power into Iran that terrifies Iran because they have a long war with the Turks going back to the 1550s. It's another existential battle. But the point that you made is fundamentally true, that Iran has this long willpower to fight. The Iranians, or the Persians rather, famously fought the Romans for 700 years, from 7 AD onwards. So they have a long strategic vision. We, on our side, our Arabian, American, and our Israeli allies, haven't really cast a long-range vision back into Iran, that we don't want to see an Islamist regime that threatens both Arabs and Jews and Americans, both in the region and around the world. And I think that's the task for all of us, to see an Iran that's different, that is decentralized. And it's not about Reza Shah Pahlavi coming into power or his family, but genuinely bottom upwards, representing the rights of the people.
Dr. Husain, thank you so much. Be well, be safe. So appreciate your time. Take care. This is Bloomberg.